Hey guys. So this is a quick overview on using Nessy. So Nessy is probably the most complex indicator I've wrote because it has a lot of variables inside the script, and it's a very complex process. So breaking it down to make it simple for you guys to understand has been a huge challenge. And I think that's part of my personality because I'd rather just explain it the right way, the way that the algorithm would probably explain it if it could talk, versus sometimes this simpler way, which is going to maximize risk, right? And what I mean by that is if I was to say every time the line renders up or down, you either buy or sell, right? And that seems like that would work, looking at this picture right here, that if it gets above this line right here, we should buy, right? Well, what Nessy's really designed for is to understand range levels of price. And what we're really looking at, even on this example right here, are these two levels. This level here at this previous level at 55,000 and this previous level here at 42,000, right? In between is basically the mean of this section, okay? So we're kind of in this mean, and this is why it's consolidating. All right. Now, it's very possible that if it does break above this price here, it could retest this level at 55,000, right? But the key points that we want to take a look at is the overall health, right? This is why we have all these multiple time frames here, because we want to look at the overall health, if this is a good position or not. But the first thing we want to do is define the perimeters, right? These are the most extreme perimeters that we can find on this chart. And to simply do that, you can go down to your horizontal line and just click this here, right? And boom, and that's set, right? So now we have our extreme levels of a buy or sell, okay? Now, when we go to a higher time frame, these levels are going to get less noisy, right? The higher the time frame is, the less noisy the price is going to be, okay? But what we're going to find though is Nessy will also give us some more information, right? So we have another line here at 51,000. So we can plot that as well, right? Well, all H doesn't work for whatever reason when I'm recording. I don't know why. All right, if we go to a 15-minute chart, we might find some even more information. Just wait for it to load. Okay, a little bit right there, but that's kind of close to this one at 51,000. All right, now we'll go to 30,000, see if, or 30 minutes, and see if we get anything from there. Okay, and we got another line right here, right? So this algorithm was actually, or this render here actually gave us an average, which is good, right? Because sometimes the high and low of a price, right, can be have too much leakage, right? It has too many errors. So when I formulated the algorithm, I was also looking for the average of volatility as well. So this has to do with a lot about like statistical arbitrage, right? Even though it's not like quant heavy, it's in the same principalities, right? So when we look at these levels now, right, we're getting even closer. We're zooming into the current price. Okay, so our current price is 44,000 and 51,000. Those are the current range level it's in right now. These outer bond range levels at 51,000 and 42. But the reason why we can't trust 42 is because it got swallowed up immediately, right? It was a wick that came all the way down, and the line was rendering from it, but it doesn't give us information, right? It's just showing that there was a bounce at that level. That doesn't say that we can necessarily use that level as information for support or resistance, right? Or a price evaluation, like I like to call it. But that's why Nessy gives us more information the more time frames that we have available. Okay, so that's the first thing you guys want to learn is being more adaptive with your strategy, right? Don't just have one set, right? What I mean is don't go just by a 5 minute chart. Add as many charts as you can, whatever package that you have. Even if I think the Pro allows you to add some time frames, but if the Pro Plus definitely allows you to add time frames, and you should, right? So now the farther out we go to a 2 hour, we find significant levels of interesting bounces, right, and rejection. So this one clearly shows all the way at the top at 68,000, and then we have that same line come all the way down here at this 42,000. So that's a pretty significant level. So even though it was a high and low, right, sort of, this is still very significant, right? This means that it bought up liquidity, and there was a bounce from the volatility, and then now we're slowing down because the spread is too wide, and we're trying to tighten that spread up so we can get more buyers to intrinsically uh, push this price up again, right? If not, then they're just going to push it down some more, right? So now that we have these other levels available for us, we can use what's on the chart right now. Okay, so even though, like, if you look at Nessy as like a two-dimensional algorithm, you're going to be missing the whole point of it, right? Um, if Nessy could render all this information onto one chart, that would be amazing. But we have to use these other time frames to look at whatever information Nessy gives us. So with this new information that we have available, we have all these different supports and resistance levels, right? And you can kind of see there's about a 3,000 difference, right? 2,000 or 3,000, real close difference between these two levels right here. Okay, so that's kind of our stronger zones, if you will, right? And this is why it's important where we buy. Okay, we couldn't catch the bottom. It's impossible to, right? Nobody caught that bottom. All right. By the time you would have got your fill order in, it would have been up here somewhere. So there's no way you caught the bottom. All right. So let's just dismiss that. The only time we need to remember that again is if it's coming back to that level, right? And then that's when we can, look at the bands and see what the next price could be. Okay. And that's what the bands are really good for. Now, but you can use Nessy historically as well, which is what we're doing to sort of see when the best time is to get into this entry. And for me, just with this level, let's just say we bought into this entry right now. We could use this as this gray line, since it's below the price, is a stop line, right? We could use it as a stop line visually. We don't need to input this into your brokerages, right? You don't need to input this into your orders, but you can visually look at this, right? The only way that you would want to input this into your orders is if you're like walking away from the computer, or you're going to be doing other things, right? So then you want to, of course, have that implemented so you don't get burned, right? But that's the importance of the gray line, right? Is the gray line is sort of that other boundary after it goes below or above the purple line, right? And we can use it as a visual stop loss, as I've said. So now, when it comes to buying, though, when it comes to getting into this entry, like I said, we can get into this entry, but we must understand that there was a level here of, I would say, price consideration at this $52,000 range. To me, though, it makes more sense to get into this buy up here than it is here, right? Now, if this is an options play, there's a bigger reason why, and that's because we think we're going to see a more higher, like there's going to be more volatility once it gets above this level, right? Because now it's testing into that level where it rejected the first time. So those are important techniques that you can use with Nessy. And I'm not going to try to let this video go too far, right? But that's one example of how you can use it. And you can use this through any markets, right? Small caps, large caps, it doesn't matter, right? As long as it shows a render of the information, which shows a line, that's what we're looking for. So let's kind of revert real quick back to just the basics of Nessy. All right. So I've showed you an example of how you can use it in a strategy, but let's just see how it works completely. Right. So this purple line, this thicker purple line, is called the magic line. Right. This line renders from volatility and positionings, opening or closing. Okay. So obviously this was an open position to buy because the price went up, right? So this was an open position to sell because the price went down. Okay. Now sometimes they'll have scaling positions where, in this example here, where they just scaled out a little bit, but they also kept adding to that position, right? Here they sold. Okay. Obviously you know that they sold because it dropped below this previous level here. Okay. That's how you knew that it was selling. This is why in Royal's group, I said that 55,000 was critical because that would be losing a scaling position that happened here. And I'm not looking at the candles, right? Because if we remove Nessy, we don't know what's going to happen. We don't have the information available. Even a moving average would not be fast enough to see where the scalable position was. But when we add Nessy on there, we see it. So this level right here was a scalable position. That's what happened, right? Because price went above the line. Now, if this would have rejected, we would have been playing the same pattern that happened, in previous times, right? And you'll see these patterns happen on Nessy. And since we're pattern recognizing people, it's good to learn the patterns of what Nessy's showing. Not what the candles are showing, but what Nessy's showing, right? The candles are just information that's displaying on a chart. They're not showing the innards and the signals and everything else that Nessy's showing, right? Nessy has a lot more data that it's computing than what a candle is showcasing, right? So it's really important to not mix those twos up and not try to have this conjugate or correlated idea of that's how it works. If you have a doji or some bar pattern that that Nessy line has to agree with whatever that bar pattern is. No, if anything, it's you follow what Nessy's saying because those are actual positions opening and closing. That's way more important than following some kind of bar pattern, right? Because those are not entry in electronic either simulations or actual live trading strategies, right? They're not implementing bar patterns. They're not implementing bull pennants or any of that in their systems. And I'm talking about quants, right? They don't use any of those. They use mean reversion. They use, different like momentum trend strategies, sharp ratios. I can go on and on. There's a lot of information. There's still a lot of information I'm learning, but as the more I learn, the more I understand why we just don't use them. Right? They're not practical. So the line is very practical, right? But we don't want to say that the line is a support or resistance per se. We want to say that the line is either a position closing or opening, or they're scaling out or they're scaling in, right? So they're adding more to their position, or they're closing out their position, or they're dropping some of their sales, right? Now, what's important though is this gray line here that I've already kind of talked about. You'll notice sometimes it switches, right? Well, let's just look historically of what made more sense and why it switched. So when it was below here, it switched because it was oversold, right? The switch happens when the price is oversold, okay? According to the algorithms, not to what we're visually seeing. What the algorithms are computing is what makes it oversold or overbought, not what we're visually seeing. Okay, so I mean, we're visually seeing what the algorithms compute, but what I'm talking about are like any other like patterns and stuff that you're using with candles and whatnot. We're just going by what the algorithms are saying, overbought and oversold. So when it flips down, this is oversold. When it's over, it's overbought. When it's overbought, that's usually when you see a continuation of a trend. Okay. That's even a downtrend. It can do both ways, right? You'll see a continuation that happened here. So there's a continuation, right? Scaled in more positions, continuation of a trend of momentum, right? And then it was it went range bound through here. That's why the line just kept rendering, right? Nothing exciting was happening. And then another volatility spike to sell. So let's just say this trader is the same trader that's controlling this purple line, right? He decides that he got into this position, and this is like his it's kind of like his trail. You know, we're following his breadcrumbs. So he's trading, right? He's still holding closing positions through here, whatever his algorithms are doing, right? And then he is ready to sell. So the line, you know, renders that position, and he's out of that position, right? And maybe he comes back and gets back in this position or whatnot. But that's basically the simplicity of how that line works. Okay. And that's why it's so reactive to price action, which is extremely important to traders, right? If we don't know where price is going, we are lost in the sauce, right? So it's good to have that extra reactor, and that's what the line does. It reacts immediately. So when we see this new line, this smaller line right here, this little purple line, this is creating a slope, right? Now, this is not really anything important for people to really break down, understand, unless you want to really know the reason why it's there for the slope. But for me, it's just a confirmation to make sure that the price is going to go up or if it's going to reject. So let me give you an example. Sometimes when they are closing out their position, right, they might be waiting to see if it is the right time to close that position out, or maybe they should keep holding it. So we use weighted moving averages, right? And sometimes you'll see price revert back to the mean. This is very important. So it's possible that this trader here was waiting for the to revert to the mean, and then you can see he dumped all of his stuff as soon as it crossed over this mean, right? And then it started dropping down. So that's why we have it implemented here as well. And that's why if you look at this where the moving average is right now, and I don't want to really say it's a moving average. That's a little too simple for that. This is a little more complex. It's using different signal filters. So this above, you know, this 56.97, whatever it is, right? It crosses over this. This would just confirm that this is still running as a bullish play. However, if it rejects this level, right, and this keeps breaking it, if it can't break this slope, right? If we were to draw this as a slope and it can't break this level, then it just confirms that this is a new level of a critical zone, right? So meaning if we break this critical zone, we're going back into the 30K zone, the 30K range for Bitcoin, which is not good, right? That's why it got bought up so fast, because if it would have dropped more, I mean, they would have lost money as well, even the sellers. So now this is our slope. Excuse me, I got like indigestion today or something bad. Sucks getting old. But the slope here, right? It comes down. Just like if we were looking at these slopes here, right? They do the same thing. They come down. They do the same pattern. I tried to keep that simple for you guys. Same pattern here, right? So you see these slope patterns emerging. And you notice, though, as soon as it goes over, right? As long as it stays above the line, right? We're still bullish. However, if it breaks immediately, then we're bearish, right? So the reason why, if we look at this picture here, at this slope, what happened, right? So kind of this similar situation where the price got over exactly kind of where it's at right now, and then it hit that one area of resistance, and then it dropped back down, and then there was that extra support, and that's why it kept holding. And then, but what confirmed for us is it held above this slope, right? Now, if that would have broke the slope, then we'd be looking at new price discovery or a new level that price was descending to. So it held that, so we saw that as bullish. We also confirmed that this was oversold, so that's a higher probability to be bullish. Now, what gets confusing is when we do go into these uptrends, right? And it's no longer it's no longer giving you any more information, right? On these higher time frames, you're going to see that. That's when you revert to a lower time frame to get more information when it is in these uptrends, right? And you can see there's levels here that are probably displayed on Nessy as well. Like this drop right here, that probably was displayed somewhere on a time frame. That those wicks right there, probably this peak right here, this peak definitely right there, this one right here. All these different peaks here were probably identified on other time frames on Nessy, right? So that's why it's important that we look at those other time frames too. The last thing I want to cover, right? Because I don't want to get into the bar coloring, because the bar coloring is a V-Wave FX, and that's going to be another video. But the next thing I want to cover is these color gradients that you see on the gray line, right? So this is still experimental, as I haven't fully dove in and refined it as much as I wanted to. But for the simple of this conversation, it's basically like an observation of the strength of the markets, right? So the more, so anytime you see blue, that means there's more, that's big money coming into one of these positions, right? And usually we're going to see a bigger reaction happen. The same thing with the yellow. So you're going to see a lot of yellow and those blues. So pay attention to those. They don't necessarily mean up or down. And see, the thing with my indicators is there is no real up or down, right? We're just observing what price is doing and using our levels to decide if it's a good time to get in or not, right? According to Bitcoin, at this position, it's a good time. It's a safer level to get in versus it was over here, right? If we would have been trying to get a position over here, we would have saw that we were still bearish, because this line hasn't rendered yet for us. And another important thing is, and it really depends on the type of and the style of trader that you are, is maybe you don't want to wait until that line renders, right? Maybe you're trying to get into a position right now. Well, the biggest thing you want to confirm that, look at your previous lines, right, to see if those levels are holding as a temporary support or resistance, and then go to other time frames, right? Go to smaller time frames and break this trade down as much and as easy as possible. Okay, that's probably the number one thing you can do. So if we unhide all those lines again, we see that imaginary slope there. So we know that right now Bitcoin is is bearish because it's below this line, right? We know that this line right here could also act as a support for us, right? So we can add that line as well. All right. So what we're basically building here is the best strategy is actually over this slope, right? Then we could use this line here as a stop loss, okay? And this could be our take profit, at 52,000. Now, if it holds above this, then we'll just play up to 55,000 again, okay? And then what could happen is the price could go up to 52, do something like this, and then hit up to 55 and then come back down, right? As soon as we see a high and low, or it established some kind of range, that's when we can really decide when is the best time to get into the entry. So I hope that kind of cleared up what Nessy, why Nessy is used the way it's used, and how it works. So if you have any questions, hit me up in the Discord, and I'll try to get back with you as soon as possible. Thanks.